Welcome to the new weekly outlook, everybody. As always, let's go ahead and run through some fundamentals and then move to the technical side with Stefanos.
Absolutely. Hope you guys all had a great weekend. Let's break the charts down.
All right. So there's going to be a couple of articles I want to go over. We already know what's happening with the US. We know the interest rates will be coming out this week, and same thing with the UK as well. But the reason why I want to focus a little bit more on the UK is because we've just had so much happening with Bank of England and then also with the Chancellor, the new Prime Minister coming in. I think this is going to be very important with the new interest rates that will be coming out, and also what are the policies that we can expect to see going into the end of the year and even next year. And so here we already know that Bank of England, along with, the Federal Reserve and ECB and a lot of other central banks, minus Bank of Japan, they're moving into quantitative tightening. So what that essentially is just contracting their money supply in the economy and also increasing interest rates. So here we can see that clearly Bank of England is moving forward with that, where they're dropping about 750 million pounds of bonds in first quantitative tightening auction. So they bought up a lot of bonds, government bonds, along with a lot of other central banks. When you're in accommodative policies, you're essentially buying up a lot of bonds, right? You're trying to put out a lot more money supply. You're trying to expand the money supply in the economy. Quantitative tightening is more of contracting that money supply, trying to make the purchasing power a little bit more expensive for people. So this is a good sign as we're moving into the interest rates that will be coming out this week from Bank of England as well. This gives us a good sense that going into the next year, we're going to continue to see these increases in interest rates, which is exactly that we need in order to control inflation, right? So this also means that, yes, there is that recession. We're already in a recession technically, but this is that global recession that IMF and a lot of other international organizations were hinting towards. So this is exactly what you need in any economy at the moment where inflation is super high. And so they're hoping this type of move is also going to help give investors more confidence and help foster growth, because you need a recession in order to move into an economic growth cycle. And you cannot just, talk about the economic growth as Truss was doing, as a lot of other runners for prime minister position were also doing. You cannot just move into an economic growth without really having a recession. So this is a really good thing as we're moving into the interest rates that will be coming out. Now, moving on to the prime minister side, and along with the new chancellor, when you compare this to the other chancellor and also the previous prime ministers that we've had, they were kind of working towards those tax cuts, right, where people will not have to pay a lot of taxes. What the new prime minister and the new chancellor are doing is, in their policies, they're expecting that people will have to pay more taxes in order to restore stability to the public finances. Again, this is another thing that you exactly need, because right now, if you continue to cut those taxes, that is one way to expand the money supply in an economy, which is not what you want to do. As a government, if that's something that you work towards, that obviously means that the central bank, even though they're completely independent of each other, the central bank really have to watch what the government is doing, what the chancellor is doing, and then have to make their policies according to that. So if on one hand, the Bank of England is, for example, increasing interest rates, they're also trying to contract the money supply. And then you have the prime minister, you have the chancellor, that's just working towards policies such as tax cuts, where they're essentially providing more liquidity into the markets, where they're essentially expanding the money supply. Obviously, that puts a lot more pressure on the central bank to just continue to increase those interest rates even more aggressively. So that's why it doesn't work. And obviously, we saw that was not working, especially a couple of weeks ago, where we saw Bank of England had to step in and provide liquidity into the markets as it was drying up so fast. And that also caused concern for, are you going to essentially lead your country to a point where you would need a bailout from IMF, which is not something to be proud of as a country, right? Not a lot of people, investors, look at that in a positive way. And so now what you essentially need, as we have mentioned in the last couple of weekly outlooks, is that you need the government, you need the chancellor, you need the Bank of England to pretty much all be on the same page, which is what's exactly happening right now, where they're going to be discussing the tax and spending plans ahead of an economic statement planned for November 17th. And also, they're saying that, yes, the taxes will increase and people will have to pay more taxes in order to restore the stability, in order for us to, have essentially enough liquidity. So then you don't have to step in once again as a central bank to provide more liquidity into the financial markets. That is not something that you need, right? Or you want at all. So as you're moving into a recession, you still want to have enough liquidity into the markets while you're contracting the money supply that you don't have to step in, because that is something that, is really going to move or drive the investors away from your country. That's essentially what this entire article is about. So if you guys want, you can continue down and, continue reading this. Here's the title of the article once again, but that's essentially what these two articles are about. Now, moving on to the economic calendar, and then we'll move on to the technical side. We started off quite easy this week so far. So Sunday and Monday, we had quite an easy economic day so far. We had interest rates kicking off yesterday in Asian session for Australian dollar, and obviously they increased their interest rates here from 2.6 to 2.85. So a slight increase, not as aggressive as a lot of the other central banks. Then continuing down to today, we start to see a lot more high impact news coming out. So in US session, we start to see that there was a lot more job openings being posted. That keeps that pressure on the Fed, because the Fed obviously wants to see the labor market weakening a little bit, softening up a little bit. That's essentially how you're going to move right back into that recession, right? And then we also had the manufacturing PMI come out, which was lower than the previous, but a little bit higher than expected. But again, for the job opening specifically, we had the same exact thing last month as well, where there were job openings, and then when you continue down into the challenger job cuts, like there was a complete different data that was coming out. So that's essentially what I want to see this week specifically. So when challenger job cuts come out, I want to see, is that in alignment of the actual job openings? Are these real jobs that are like more jobs that are being posted? Or are these the jobs that were removed last month and now they're just putting that back onto the market, right? So those are two completely different things, essentially. Then going down into the Asian session, you got New Zealand employment change coming out, the unemployment rate, and then also you have the Central Bank of New Zealand's governor speaking as well. Continue down into Wednesday, which is going to be a very important day tomorrow, where you got the non-farm employment change, but also most of the emphasis is going to be on the federal funds rate. So we were targeting initially, like, a couple of months ago or so, they were targeting around a 4.5% increase, or like a 4.5% interest rate target going into March of 2023. Obviously, that's already what we're expecting to see, another 75 basis point hike, and they have increased that target to now coming up to 5% or more going into March 2023, which basically means that we can continue to see some more 75 basis point hikes. This is not just going to be the last of it. The most important thing here is going to be their statement, essentially what are they going to be saying, and the press conference as well, both of these things. Essentially, what's the outlook that they're giving out for the remainder of the year, and then also going into next year. I think that's going to be very important, and we might even see the market being a lot more volatile already right off the bat, especially today. We start to see a lot of these assets sitting at these all-time high levels, and now we're starting to see some of those corrective moves from the massive bullish run up that we've had in the last week or so. So
I think that pullback. I'm
yeah,
sorry. I was going to say, I think that pullback was due to, wondering what's going to be happening next month when it comes to the rate hikes. If we're going to go 50 basis points or 75
in December.
in December. Yeah.
Okay, yeah. I think we're gonna continue with like if you think about it, like to hit that 5 or 5.25% in March of 2023, I think we would need to see a couple of more 75 basis point hikes.
Yeah. No, I agree. I was just saying, I think that's what that pullback was, kind
Mhm.
of deciphering what they're going to be doing in December, because everything's already priced in for November. So,
Yeah.
the fact that they're even debating it shows that, in the market.
Yeah. So right now, I think the discussion is more of, for the next couple of times, is we know it's going to be a 75 basis point hike, especially with the challenger job cuts that will be coming out, and along with the JOLTS job openings. But the discussion is, for sure it's a 75 basis point hike, but can we go up to a 1%? And I think that's where a lot of this inflation data and all this stuff is going to be coming into play as well. And then going into Thursday, you got the UK's interest rates coming out, expecting another 75 basis point hike here as well. Another important thing, what's going to be happening in their monetary policy summary. And then also what is Bank of England Governor Bailey going to be talking about, or essentially, what's the outlook that he will be giving as well. And then continuing down into New York session, you got the ISM services PMI, and then Friday we end off with NFP. So this week is very important when it comes to economic data. It's NFP week, plus you got interest rates coming out from two major central banks. It's all yours now, Steph. Go for it.
Absolutely. Let's see. My screen. There we go. I was just actually looking at this over here. This was that little spike on gold that we're about to take a look at, but it looks like Biden has endorsed Fed's policy pivot. So anything Biden, it was funny. I was reading this. Where is it? Any endorsement by Biden should be warning flags. But
Yeah.
all right, looking over here at GJ. I don't have everything marked off because I have my original chart over here. I was just journaling a trade, but looking at the immediate price action, looking at last month, extremely strong month with Sunak coming in. You saw that strength in the pound a little bit, and then also obviously weakening in the yen after the what was it, last Friday or the Friday before that they intervened with the yen? Was that last Friday?
No, I think it was a Friday before that.
Okay. All right. So again, strong month over here of October. Now looking at November, you're going to get that bottom wick formed. Can we start coming into these levels? Let me just get my tools right here. You get these previous wicks right around 169, 168 over here, where we could very well hold support anywhere in these areas, or we could even come right back down to 165 potentially. But I think we may be coming into these levels before we hold support and possibly continue up. Again, the more weak the Japanese yen is going to stay, the more this pair is going to continue to go back up. So looking, and especially with the Great Britain pound, they're going to be increasing rates this week too. So looking at the weekly now, weekly ended up closing, just mark off our resistance around that 167, 168 level. We can obviously adjust that as we go down the time frames, but you could see that clean close above that area and the high created, where now we could very well come down to this area and then retest the high to continue back up, right? Especially after this liquidity grab down here, we've been very bullish ever since. So can we continue that? Again, it's just, beginning of the month, you're going to get that liquidity grab before heading back up. Now, one thing I noticed over here today is that we've just been like respecting this bullish trend. You'll be able to see it on some of the lower time frames. Actually, I'm not even going to draw it yet. We'll draw it on the higher time frame and the lower time frames. But you have a high that was created right up here. You can always adjust that. Right now, we're kind of consolidating above this level. We ended up closing above previous resistance over here with this candle, coming down, holding support with that candle right there, faking the level out and holding support again with that bullish candle. And then we just created that high. So are we going to come down into here? Are we going to create a higher low over here to continue up? Remains to be seen, but we just got to see what's going on the 4 hour, the 1 hour, 30-minute. So we have our high created. This morning's been all bearish. All right, we ended up holding a resistance right in this area up here. We ended up rejecting that area again. Strong bearish candle close, another bearish candle close. We just grabbed liquidity and now we're flipping bearish with a fairly clean move here to the left, showing us that we could be coming down into 169 flat. So we already passed the low of the previous 4 hour candle, and the 4 hour candle opened up around 2-3 hours ago. So
There's also a lot of liquidity grab that's happening right now. Like real quick, if you just
yeah.
hop back up on the 4 hour time frame, there's been a couple of candles where you can see the high and the low being broken and the price pushing down. So if you start off with the third candle from the top, that's the first one that breaks the high and the low from the top. The third candle
Been
that
doing that a
almost
lot.
the one that almost closed like a doji, the bearish one. No, the one.
Right here.
Yeah.
Yeah.
So broke the high and the low after the previous two candles, which had no top wick whatsoever. So that tells you that right off the bat, there's a lot of bearish pressure. And then the third candle closes, like a bearish doji. The next candle continues down, holds on to that nice strong resistance. Same thing, breaks the high and the low, comes back and closes with a strong bearish candle. And that's what currently the current 4 hour candle is also doing. A lot of this is just liquidity grab. So like you said, can we just come down to the 169 area? And then, if you guys want, go back on like the daily time frame. We're not going to do that just yet, just to continue moving forward. But if you go back on the daily time frame, look at those massive bottom wick rejections in that bullish trend that Steph was marking off, right? And take a look at what was happening to the left, essentially there. So just that a quick little fake out, yeah, right there where your cursor was. Look to the left of that at the bottom wick, and then look at how all of that was a consolidation resistance as well. All of this is just, again, liquidity grab here.
Absolutely. Yeah, it was let's see, that's what I was gonna say. The liquidity grabs over here and the indecision candles, that's been going on for a couple months here on GJ, where you see nice setups after that, where price will grab liquidity, flip bearish, and then continue right back down. Normally that'll tell you like maybe I want to stay out of this, but lately that's been happening a lot actually. So looking at the 1 hour now, we ended up breaking below the previous consolidation. We were consolidating over here to begin the week, and we ended up breaking below wick to fill, grabbed liquidity, filled that wick, and continued down and created a low right down here. Then we pulled back to retest the previous area up here, and now we're continuing down. Now we're going really based off trend lines and not trend lines, but support and resistance, supply and demand. But if you look at what we've had over here, where price has been kind of respecting this area, you can see it better on the 1 hour. You just got to zoom out a lot. But we've been tapping into this area. There you go. Right there. Rejection here, right over here, higher low here. And now what we ended up doing was kind of breaking below it and retesting it. Now, again, you really want to just trade levels, but this could help you understand that we could be rejecting that level, strong bearish candle close, another close right below that level over here. We do have a lot of rejections in here, which is why we're not continuing down, but you do have a clean move to the left after that rejection of that key area, previous support, now resistance, tapping off that trend line. We could very well be continuing down from here. So can we tap into 169 again? Or are we going to form some kind of a higher low again? Maybe this trend line is not accurate and we could very well continue back up as we've seen on the daily over here, where we create the higher low, maybe a higher low here to continue up. Now 30 minutes, a little interesting, where we did get a strong close right in this area with a wick to fill, and now this candle came up into the previous range, and now it's kind of rejecting. We did we pass low that candle? It's pretty much even, but right now we're rejecting that area so far on some of these lower time frames, and we're failing to break the low to continue down and mirror this move so far. But again, we could still have some volume. You see that volume popping in around 2 o'clock Eastern Standard Time. So this could very well continue right back down after that rejection. Do you have anything to add?
That's all.
All right. So looking at gold now, same exact thing. We'll go up to the monthly. Mark off a few levels over here when it comes to immediate price action. You guys know all our higher time frame levels and stuff like that, and how we've rejected that level back in February and March. 2075. Rejected that level back in March after the invasion of Ukraine. Fed introduces the rate hikes, and we've been bearish ever since. So we're struggling to break below this area over here. I would say 1615, 1630. I would just mark it off 1630 so far. Where we're holding that support in this area. Again, we've been extremely bearish. You'll be able to see that in the lower time frames, but the month just started and we barely have a bottom wick. And the Fed is going to be increasing rates the next 2 months as well. So can we continue through this level, breaking these wicks and continue down into here? Previous support around like 1570. We'll see on the lower time frames, but we could very well see us continuing down and mirroring this candle right here to continue down.
If I could add one thing here real quick, it just comes down to like the price action details, and hopefully you guys will start seeing that a lot more. But when you look at the previous 2 monthly candles, like after we were able to break past the support, you got a nice top wick and then continue down. That's exactly what you need. But look at the last monthly candle that ended up closing. We never really broke below the previous monthly low right here. We just tapped into it, and then you had price coming right back into that area. That's a massive top wick rejection for a monthly candle. If anything, that should have been more of liquidity grab to continue pushing down and maybe end up closing somewhere here. This is more of a sign that you will see on lower time frames of exhaustion. This does not mean start buying up gold right now. Obviously, from a technical side, you do not have any of that confirmation, but this gives you an indication that there are investors that are sitting on the sidelines that are not just jumping into the safe haven currencies and commodities just yet. Yes, there's a recession coming up. Everyone already knows that. And obviously, we are going to see gold, increasing in value very soon, but it's not going to happen just yet, right? Because you need to see a lot more of that market uncertainty settling into the markets. As of right now, the only thing that the markets are really looking forward to is which country can really get a better grip on inflation first, and which means that continue to increase those interest rates without losing liquidity into your financial markets.
Yeah, no, I was just marking this off too. We could get that pullback back into 1725 on the monthly
Absolutely.
and then continue back down. Now we started off the month obviously with actually finished off October really with 2 bearish weeks on the dollar, right? So that's where you saw, pullback. Where is it? It's the wrong one. That's where you saw the pullback on the weekly over here, where we were holding support. We were failing to break. We also passed the high of the previous candle over here. So that's where that ended up coming from. But right now on the weekly, you guys see we're creating these lower lows, lower highs, but failing to break the support over here, right? That's a strong support where we ended up retesting the previous support up here at 1700, holding resistance, rejecting, and then also retesting the previous candle body closes and opens of this candle, passed through it, ended up failing to retest that wick over here, and then flip bullish and close bullish, cementing that support. Then this candle passed the high of the previous candle, flip bearish, but again, failed to close below. Now this candle is a current doji candle. So where is gold going from here? To me, we're ranging on the lower time frames. So if you see the daily now, the daily is also kind of creating some higher lows over here, right? You're seeing some of that pressure starting to come in and how we're failing to break below previous lows. So right now, remember we had 1680 as a very significant support and resistance on the higher time frames. Finally broke below it, then we consolidated and ended up holding this as a previous support. Now we can adjust that, we can move that anywhere in here, but right now we're holding a resistance in that same area. We failed to come back into this range again, right over here, failed to come back into that range, ended up rejecting it. But right now we're holding a higher low so far with a strong bullish candle on the daily. So can we close somewhere like this, right here? Maybe we close right here, maybe we close right here, but will this wick get filled? Right? Can we hold support? Next candle creates a bottom wick, flips bullish, and fills that wick, continuing back up to that 1660 area, 1670 area, somewhere up here, and just continue to range. But again, tomorrow's the Fed funds rate, so maybe we're just grabbing liquidity. We'll see what we end up getting. All right. So now I'm just going to adjust this to right around here. You got that previous support over here, resistance, rejections over here to the left as well. This we're just going to get rid of for a second here. Draw it like that. Could always draw that to the left as well. Right now, this was a significant support that we finally closed below, rejected it twice, came right back down to form a higher low, right? Form a higher low, and then closed back into that range. Now we created this high, we're coming right back down. So everything's a range. You can't, there's no clear direction, there's no clear trend of where price could possibly be going over here. I want to see if this makes sense. Potentially, right? Could we be holding that trend? I think you'll have possibly safe buys above 1660 right here if you hold support and continue up to 1680, but then you're right back into this range. So just stay careful, be careful in this area. But if we hold that resistance and continue down, you may have safe sells below here. If you look at the 1 hour. Previous support right over here as well, and then resistance. Right now, we started off the month and started off the week very bullish, right? And then Joel's job openings came out, and all the we got some short-term pullback over here and continuation bullish on the dollar. You're seeing the price action over here. you're seeing the price action over here starting to come back down. You get that 10 a.m. volume over here. We closed below the previous support that was formed right here. Price comes back into that range, and now we're rejecting it and not closing it below that area at the time. Yeah, we got about 30 minutes left. So can we continue down from here? And I'm actually just going to move this down to here as, you know what? We'll keep that really thick right in here. It's a little bit challenging once you get all this consolidation over here, trying to figure out where price is going to push into. But if we can hold this as a resistance, I could see us mirroring this move down coming into here. So are we going to be able to hold support here and continue back up and maybe range, or are we going to break through this area and continue back down? But based on the higher time frames, it doesn't look like that's happening with these higher lows that are being held. 30 minutes interesting because now we can adjust this, get that support. You need to close below that area before mirroring this move to the left here. Get anything to add?
I would say just be careful when you guys are looking for these trade opportunities this week, because a lot of this is setting up for the expectation and also just corrective moves. So then you can see much better moves when interest rates do actually come out. Plus you have NFP, but I do think this week you're probably gonna have the interest rates overpowering NFP data that will be coming out. But also for gold specifically, that 1630 area that Steph marked off, the zone, go back on the weekly time frame and then extend that over to the left, and you guys will see that there has been consolidation at this level previously. Yeah, so if you're just to extend that support zone that you made around 1630, Steph, the zone, and then extend that over to the left, then you would see exactly where price is sitting at right now. Yeah,
Oh,
there
you're
you go.
saying, okay. I had the horizontal line there.
Yeah, and then, and then just on the settings, you could just do like extend to the left or something, and you would see like all the way back, and you would see like how price reacts here. So that's why it's such a key level, because this price has consolidated here previously, and also it has respected it as support resistance. But every time price does finally break out of it, there's a ton of volume. Either price is going to be making a new low or it's going to be making a new high, right? So that's why it's very important where we are sitting right now. Between that 1630 and 1680 range, you have a great potential for like scalp opportunities, maybe even some day trade opportunities. But if you're really someone who's looking for a swing trade opportunity or just trying to be a part of a bigger move, I would say wait until the interest rates come out, and then you're gonna see potential setups, going into interest rates.
Yeah, you got plenty of opportunity this week. So plenty of data, NFP at the end of the week as well, not to mention FOMC tomorrow. So just stay
Yeah.
patient, stick to your setups, and be disciplined.
Absolutely. So as always, if you guys have any questions, feel free to reach out to either of us. The best way or the fastest way to get a response, for me at least, would be on Instagram at SharmaFX. Stefanos is StefanosFX, and we will see you guys for our live session. So I'll go ahead and post that on the community tab on YouTube here whenever we do end up deciding what day we're going to be trading.
Absolutely. Do you want to do tomorrow?
We
For
could do
FOMC?
tomorrow interest rates.
You want to do interest rates?
Yeah, we could do interest rates tomorrow.
Let's see. All right. Definitely. All right. Yeah, let's do 2 p.m. tomorrow.
All right, sounds
Or
good.
do you want to do 2 p.m. or 2:30? Or actually, we'll do like 1:30.
Yeah, 1:30 before interest rates come out.
Okay.
So
All
we'll
right,
see
let's
you
roll.
guys tomorrow, half an hour before interest rate news is supposed to come out, back here on YouTube. Other than that, have a great rest of the week, everybody, and we'll see you guys soon.
Absolutely.